always moving the bar, trying to find ways not to pay homeowners for their roofs. So when Lifetime Roofs come in we offer a free roof inspection and a free roof consultation. That goal is to inform homeowners the state of the union of their roofs. So we want to help homeowners get ahead of the insurance companies before they miss that window to take advantage of those premiums that homeowners pay month and month. So it's the insurance goal is for you to continue to pay and never use it. It's Lifetime Roof's goal regarding the roof is to get some of your premium back when you need it the most and that roof starts to deteriorate. So we educate our homeowners and be a part of that process from start to finish. From the roof inspection, roof consultation, to assisting with filing the claims, being out there when your insurance company come out to represent the homeowners. So we're there throughout the entire process. That's important because if you don't have a reputable company like Lifetime Roofs working with you, then the insurance company are gonna find a way to write up patchwork only. That's what they like to do. Our goal is to get your full roof approved. So another thing is when it comes to buying and selling, I think Stephanie alluded to this as well, a lot of the deals stall out with the realtors because insurance companies are not insuring roofs. When they get to that 10 to 15 years of age, they're not looking to insure that roof. So you'll run into a lot of problems whether you're the buyer or seller if you haven't already addressed that problem. So that's another part of what we're here for too, to assist with that process so you won't get jammed up on closing a house, buying or selling. But we're just excited to continue to work with Better Homes and Gardens and Metro Brokers, and we look forward to continuing that relationship, and any homeowners that are seeking our service will be more than welcome to assist with that process when it comes to your roofs. Thank you for letting us be here. Anything we can do to help, feel free to have a conversation with us.
And I just want to add one thing. Brad did my roof last year, so when I heard about the thing about your roof getting close to 10 years old, and there was that storm that came, and you know, them people come knocking on the door, so I'm like, oh, well, let me call Brad, and let me see, do I qualify for my insurance company to take care of it? And they did. And so what I like about Brad, they get on the phone, and they talk to your insurance company because, you know, that's Chinese language to me. They talking that kind of stuff. So, and he comes out and they came out and said, yeah, you need a new roof and everything. But how about this? When he got the paperwork that they sent me, they didn't cover all of the roof. It was part of it that they left out. So he was like, I think you need all of this done. So he came back out, had his people come back out, and it showed that I needed all of my entire roof done. But see, the insurance company, they was trying to cheat me, and I wouldn't have known, okay? So the insurance covered my entire roof, okay? So don't talk to the people that come knocking on your door. Call Brad, okay? You don't want those people because we don't know if they fly by night or whatever. You know, always get referrals for different things. You don't need to be relying on them reviews you see online and all that. You want to rely on somebody that has actually used the service, okay? So, thank you, Brad.
We like the three
Okay. All right. Thank you, Brad. Okay, next we got new construction coming up. We got D.R. Horton. All right. So come on, take it over, D.R. Yeah, we got a lot of, it's so many different new construction homes out there. That's why we got different vendors, so y'all can select whoever you want. You know, they may buy over here, buy over there. So take it away.
First of all, I want to say thank you to Metro Brokers for always inviting me to participate in different events. I did this last year, and I'm very honored to be here today. Thank you very much for always supporting me as well. You guys are in a perfect position today. I don't know if, you know, there's plenty of places you could have been, but you're right here to get some knowledge and education on the home buying process, which is one of the largest purchases that anyone will make in their lifetime. With the way that this market is now, New construction is really a great way to go because you're purchasing a home that comes with warranties. You're purchasing a home where the builder takes into consideration what the interest rates are, how the economy looks, and they want to contribute more money to help it be more affordable to the buyer. I work with D.R. Horton. This is my second go round. My first time I was with them for 8 years. I believed in the company enough, I went back. I've been there now for a few months, and right now with the way that D.R. Horton is set up, I can sell any new home construction community that is D.R. Horton throughout the entire metro area. I am currently sitting in the Reserve at Calcutta, which is in Stockbridge. It's a single family community, 5 floor plans, 1 ranch plan, 4 2-story plans, and then directly around the corner we have Echo Glen, which offers townhomes to the buyers. Right now we're seeing traffic starting to pick up a little bit. People are starting to get out and really look around. I know the economy kind of had everybody kind of shook to where you wanted to be careful about getting out spending that right now, but now is really a great time to purchase a new home and to move forward. I made sure to provide information on our community. Also, just to give you an overview of our current incentives, we are actually buying a rate down to a 4.99 government loan, whether it's FHA or VA, 5.5 on loan, towards closing costs, and all appliances included. Also, if you are a service member, school teacher, health professional, we are contributing an additional $2,000 towards your closing costs. So we also have different down payment assistance, which I won't get into that because I know that you guys have your preferred lender, and I believe in playing fair. So, but I will be glad to assist anyone if you have questions. I'm located over in the middle. I have my business card there. I'll be glad to meet you in any community throughout the metro area if you're interested and show you what we have to offer.
Thank you.
Okay, now we got Rockhaven coming up. You guys got too much to choose from these days. Make a decision.
Yes. Choices is the best thing, right?
Right.
That's what I'm talking about. Well, welcome future homeowners, and if you're not a future homeowner, if you're a future homeowner, and if you're already a homeowner, welcome. And again, thank you Metro Brokers for always supporting us as well. So we are Rockhaven Homes. We are a beautiful community. We have 15 different communities that are currently underway throughout Metro Atlanta. We have homes in East Point. We have homes on the north, east, west, and south side of Georgia. So anywhere you want to buy a home, you can find Rockhaven Homes. That's one of the beautiful communities that is going to be here to service you guys. Yes, my counterpart is in the back of the room there filming. Hey, brand new to Rockhaven Homes. Our homes, we do townhomes and single-family homes throughout Atlanta. Right now, when they were talking about roofing, it's kind of a good idea to just say one quick thing to you in regards to new construction. The biggest thing, even when you buy a car, is the warranty and that aftermath of it. That's the same thing when you buy new construction homes. It's one of the things that you don't have to worry about. Because all of our homes are going to come with a 1-year builder's warranty and also a 210 industry warranty for you as well. And those of you who are concerned with safety, we have smart homes. All of our homes can be operated right from your smartphone, where you can lock and unlock your doors, open and close your garage, regulate your HVAC, because when it starts off at 73, then it goes to 93 by 4 o'clock, you're in control. And we're doing right now in Southeast Atlanta, we're only about 10 minutes away from here, down the street, 10.5, and you are there to us. We have 3 beautiful communities serving this area over here. We have Cascade Ridge. We also have Whisper Creek. And then we also have Stonegate, where we have one last home just sitting there waiting for somebody in this room. So we are looking for you. And we are there 7 days a week at our community. And again, we are Rock Haven Homes. And again, congratulations in advance to everybody in this room who deserves that shot at home ownership. And I just want to say, if you think you couldn't, you can.
Yes,
because
right.
we have so many people that have come. I'll tell you, credit starts off with the time on the clock. I say this all the time. Sometimes they come in at 5:15, 5:30. Those are credit scores. 5:60. So, and we've gotten people to where they need to be in order to purchase a home. We are not just a home builder. We are your partners out here in this industry. We are here to educate you. We are here to hold your hand through this process. And so if you have questions or concerns, we're going to be your biggest friend and your biggest advocate out here, even though you'll have your partners as well as Metro Brokers working for you as a buyer. But we are all a team, because our goal is to make sure that we get you to the finish line by any means necessary. So we're going to make sure that we do what we know we do best, is build these homes, give you these incentives, and have you guys coming out there to just fall in love with our beautiful properties. And so we're just hoping that you give us 1% of your trust and let us earn the other 99. And that's at Rock Haven Homes. I am Juanetta, your friendly neighborhood realtor, and I am always available. Out here, we have some information that we're passing out at our tables. My counterpart, other one, Cedric, I don't see him around in here, but we are here. And then we also have nice specials too, where we're doing 3.99% interest rate specials, 4.99, and up to $60,000. I didn't say 10, 20, 30, 40, 50, $60,000 in incentives with our communities that are right here within minutes of where you are here at Metro Brokers. They're calling now. Look at this. But we are definitely. I don't like to get this talk around. So we are here and we partner with everyone here at Metro Brokers. So again, if you are looking for a home, don't be shy about it. We're over there at the table. Give us your information. We'll follow up with you, and definitely look forward to seeing all of your beautiful faces at one of our communities soon. All right. Thank you.
Okay, all right, we're gonna do some quick prizes. And then I want Operation Hope to come up, because
Got some more speakers.
yeah, people that may have credit challenges. Okay, so let's pull.
So the first prize is going to be a $10 Amazon gift card, and
I have Stephanie pull it.
Yes. All right, they gonna make me look bad, guys. Okay.
You're gonna be the good guy. Everybody's winning.
All right, we have Martha March. Oh, what is that? All right, we got Charlene Tillman.
$10 Amazon gift
All
card.
right, we got Joanne Sanchez. Yay.
I need to see some ID.
Right.
Audrey Powell. Right. Okay. We have Pat Butler.
They might have been in the first one.
Okay.
Not in here. I'll be here to win.
Thanks, Pat. I didn't do it at the Oscars. Pat's not here, but I will graciously accept on his behalf.
Okay. Andrea Booker.
Oh, I was like, how you reading it like you don't know? Andre Booker.
Let's shake it up. We got one more.
One more. Okay. Kenneth Collier. Kenneth Collier. He left. Okay. Okay. All right. Okay. Carol Smith. Carol Smith. All right. Okay. Not here.
To the list at the end of the
One more.
Oh, you still.
You're good with the
Yes or no?
Good,
Yeah.
okay.
Yeah.
All right,
We'll
so
come back
now-
to the prizes later.
Okay, Operation Hope, I want you to meet them. She's just gonna do a quick intro because, hey, if you're having credit issues, you know, we all been up, down, like a yo-yo, whatever. She's here to help you, and then you could go pick one of them new construction houses.
Hey.
All right, come on.
Hi, I'm Jamil, a financial well-being coach with Operation Hope, and thank you to Metro Brokers for having me. I've been working with them. What is it now, Pete? Maybe like 2 or 3 years. Raise your hand if you've heard of Operation Hope. Okay, got a few people. Operation Hope is a nonprofit organization that teaches financial literacy. So it's really about educating the community on financial literacy just in general. What I do specifically is once I have a client, I get to understand their goals, and then I help them by creating a budget and also reviewing their credit to see what we need to do to get them in the position to accomplish their goal. Now, 90% of my clients want to become homeowners. So once I get that budget in place and see what's going on with their credit, I create an action plan to help them. And I would say about every 30 days we're meeting to make sure that you're completing the items on your action plan. And the service I provide is absolutely free. One of the things I'm not going to talk long, but one of the things I really want to stick with you today or make sure that I'm communicating with you is that, like she just said, there are clients that want to purchase a home, but their credit score is low and they feel like, oh, I can't do this. Well, one of my jobs as a financial coach is to get your mindset right. It is very important to develop a certain type of mindset when you want to accomplish that goal. So when I'm working with my clients, I tell them what books to read, what social media they need to follow, the information that they need to constantly consume to first change their mindset. When you change your mindset, you change your habits. So now you may not want to spend your money on this, that. You're thinking like, oh, I want to save. And before you know it, when you get your mind right and then your habits right, you'll start accomplishing your goal. And that's what I do for my clients. I help them accomplish their goal by giving them the tools and resources that they need to improve their score and eventually purchase a home or accomplish whatever goal they have. So I look forward to working with you all, and let me know if you have any questions. It's so nice meeting you.
She's over there in the corner. She's over there in the corner. Right before we bring up Yvonne, our lender, because, you know, she's going to get you ready so you could go meet the lender. But we just want to recognize our sponsor with Medicare. Okay, you want to wave your hand, stand and wave your hand.
Right.
It's over there in the conference room, okay? So if you're over 65, you're going to need that blue.
Or nearing 65.
Right.
You don't want to wait
Yeah.
till you get 65.
Right. So Medicare is option for seniors, because some people that are get on Medicare early because of disability. But, and a lot of the information about Medicare is confusing, it's hard to find. So I'm here to make it easy, simple. And if you have any questions, come and stop by, you know, pick my brain, and there's no cost to my service at all. So,
Did y'all hear what these people are telling y'all? They say free.
Yeah.
Free.
Yeah.
You're not hearing that
Right.
too much in this economy.
Right.
So take advantage of these services.
Yeah. Thank you. She's in the conference room. Okay, we're gonna bring up our lender, Yvonne. She's with Metro Financial. And y'all know, buying a house, unless you got cash, we gotta go get some money, you know? So it's a financial transaction. No money, no house.
Right.
So
No money,
you
no house.
got Jamel that's gonna tell you how to get the money if you need it. Ain't no use to you just not having bad credit. And now Yvonne, she's gonna tell you what you need to do.
So hi, my name is Yvonne. I'm a loan officer at this office. I have been in the industry since 1997. So really long time. I've seen kind of it go through all sorts of versions, from crazy products to really tight lending to the 2008 mortgage meltdown and sort of back at it again. And this is the third year I've participated in this office. June event, and I'm really here just to answer questions. I obviously don't want to do a presentation because it would be like somebody presenting how to do, thoracic surgery to me. I would sit there bored. But I'm here to answer any questions you guys might have about lending, or just general what lenders look for, or anything that you don't want to go and talk to somebody in person, then this is a good opportunity. So,
Any burning questions out there?
I got one. That one question you just said. Like, what are you guys? What is a lender actually looking for?
Yep.
And the only reason I asked that, I got a pretty good credit score. I got a feeling that's not just going to be it. So what factors really come into
Yeah.
play?
Sure. 3 pillars of lending is what has been around for the last 30 years that I have done this. The first one is credit. So in the United States, all of us adhere to the same guidelines, meaning Bank of America, Metro Brokers Financial, or anyone in between has the same rules and regulations to adhere to when it comes to credit, because all loans, ultimately speaking, are sold as mortgage-backed securities to Wall Street. All loans are. Otherwise, eventually, a lender would run out of money, right? Like, it's how loans work as a whole, just so everybody understands, is think of it as a debit card. And every lender that is in the business of mortgages has a debit card. And let's just say that debit card has $100 million. The idea is, every single month, to lend that $100 million, sell it to Wall Street at a one-time profit, free up that money and do it again. And that money is borrowed. So that's why when borrowing rates set by the Fed change, lenders are able to adjust those rates because they are borrowing that money as well. So having that said, the rules are the same because ultimately everybody's selling the loans to Wall Street. So they have to free up that money to do this again and again. First one is credit. In the United States, the lowest credit score for sort of traditional loan is 550 on an FHA, and that requires a 10% down. Most people don't have 10% down because $250,000 house will be $25K, right? So most people are starting with that minimum 3.5%. That's what the FHA down payment starts at. And that credit is 580, and that's every lender. So the first thing is the credit. The second one is job. Because when you're lending someone money, you have to feel, no, not feel. It's no feel. You have to justify that the person has the ability of repaying that debt based on the job that they have. So you're looking for stability. The idea is if you lose your current job, you are likely to get another job in the same field paying you the same because you have some experience. So job stability is the second, and obviously how much you make on that job has to be sufficient to cover the debts that you have, and we could touch on that as well. And then the third pillar is assets. What are you putting into the deal? And again, the idea being, I'm not going to walk away from something that I put in $15,000. I'm just not, right? Versus when I have the least amount or no amount of money down, the lender has to then proactively think, how do I mitigate this risk of me holding this entire debt on my shoulders? So they will put in penalties, they will put higher interest rate, that money has to be paid back. There's all sorts of things behind the curtain that has to happen. Otherwise, you walking into an apartment, but it's a house that you get to keep, and I'm giving you all that money for it. So there has to be sort of that, like teeter-totter, I'm gonna do this and you're gonna do this. If you're not putting any money down, I'm gonna increase the interest rate. If you're putting money down, I'm gonna decrease the interest rate. If you have great credit, I'm gonna ask you less questions because all of your life, you've paid everything on time. That's kind of the idea.
One more.
Yep.
How does that, you said about the job,
Uh-huh.
how does that constitute with those who have small businesses, provide services for the community? How does that?
Well, everybody who's self-employed provides service of some sort. So I like to spin on it, provide service to the community, but ultimately speaking, you're a business owner.
Yes.
So in the business owner scheme, most people will go to their CPA and say, I want to pay the least in taxes. Right? I legally have to use whatever you're paying taxes on as their income, because what you are saying to me is, I made 100,000, but I had to spend 80 to make this 100,000. So I only make 20.
Understood.
So 2-year history, and we average that income. Now, having said that, there are products that are in place to look at income from different perspectives, but all of them will have a higher interest, larger down payment, and higher credit score requirement, because the job is now one of the pillars we have to kind of dismantle. We can't do the traditional validation of income. But the trick is, you have to think long term, what's better? And because I do math for a living, this is one of those things that I oftentimes have a conversation. Let's just say you're trying to qualify for something and you need to make $10,000 a month to qualify for it, which means you're making $120,000 a year, 10,000 times 12 months, which means every single year you have to pay Uncle Sam probably around 20%, it's about $25,000. And that's great. So in 2 years, you paid $50,000 to the IRS. Normally you wouldn't, because you would have all these write-offs. You have to then consider, am I better off to take a higher interest rate and just put that $50,000 as a down payment? Because that higher interest rate payment is going to be, say, $200 more a month. That's still that $50K when money to the down payment versus the IRS. So whomever you talk to, you want to make sure they do that math with you, so you're making choices that are best for you.
Thank you.
Other questions? Okay, I want to add, we have homeowners in here, so, you know, you have your house, but maybe homeowners want to consider investment property. What does that look like for a current homeowner?
Absolutely. So obviously you can purchase a house as an investment property utilizing the traditional 20% down, which all investment properties really start at as a down payment of 20%. Doesn't require you to have any history of being a landlord, none of those things. And I think a lot of times people kind of forget how lucrative that is, but right now in Georgia, 40% of all licensed loan officers are out of state, because that many people from out of state are buying our properties for investment. So it's definitely a market that is hot that I think a lot of people don't consider. But when lenders started looking at it, so having done this since 1997, I have seen all sorts of different products that are really aggressive or really tight on financing, and there's million and one different products that come at you, then they fall apart, they come back again in some different form. But the investment property has been one that has been interesting, because new products that are called DSCR loans, which same thing, 20% down, all of that, but they don't look at your income for qualifying purposes. You are only looking at how much that house is able to rent for. And as long as the mortgage on the house that I'm selling, that I'm doing the loan for you as an investment property, is renting for whatever the mortgage is, we don't count anything else. So you just put in your down payment. The caveat to that loan is you have to be a homeowner. So they are looking for you to have housing experience, but this could be your first investment property. But definitely one of those things that I think if you ever like are looking at Zillow and looking at houses, I invite everyone, because I do it whenever I talk to someone, to look at its history. And you could it's like halfway through the page, hit the history of that house when it was sold, and just look back, last time it was sold, let's just say it was 10 years ago. A house that's selling for $320 10 years ago probably sold for $170. Right. And that's just money that is free money. Yes, ma'am.
Yes, I have a first mortgage and a second. I'm trying to figure out, for the last 24 years I've been paying that, first and second.
Okay.
I'm trying to figure out how to get rid of that second mortgage.
Is it fixed and second or HELOC?
It's fixed.
Okay.
But my first mortgage is not.
Okay, so your first mortgage is an ARM? Okay.
I made a mistake as a new buyer for my home. And when I did it, I wanted a house. So I just went with it. I just figured I would be able to pay off my house.
Yep.
Which I'm close.
Yep.
With that second mortgage.
Because I'm imagining the second mortgage is an interest only, so you're not paying anything on the principal, so you have to proactively add to that to tap into the principal.
I know. know. So, is there any way I can push it and add it to the first meeting?
You would have to refinance.
Oh,
You would have to
I kind of
refinance.
figured that, but I was just wanting to make sure.
What kind of mortgage do you have on your first, or what kind of an ARM? 3, 5, 7, 10? 10-year ARM, okay. Do you know what the interest rate on it is? So you want to call someone and just ask if the current interest rate are cheaper, and you perhaps would be better off maybe refinancing to like a 10-year mortgage, and then getting rid of that second. That's one of the things if you're a homeowner, consider your debts. I think most people, kind of get intimidated by the interest rates being in the 6 and 7%. But I think most of us in this room who have a credit card don't have one that's less than 10, 12% at least. So if you could, if it's an option for you or something considering, take that debt and pay it off. Certainly look at the numbers. It's not for everyone, but look at the numbers. I think one of the things that homeownership gives you is the financial stability to have an asset that you could tap into for other things that you otherwise can't. Wouldn't always do it, and obviously in the lending world, we don't refinance just willy-nilly. You have to actually tell an underwriter the reason you're refinancing someone, and it has to be justified. So you are refinancing to get a higher interest debt. You're refinancing to do remodeling. There's a reason. You can't just, otherwise, people will be calling, people soliciting to refinance, making money, and sort of selling them an idea that it's better, but it's not. So you actually have to prove that something is better. But student loans oftentimes are just so high interest, compounding interest, renovations, things that really are just sort of out of reach, that you are able to utilize the equity of your house to be able to do that, or obviously do a down payment on an investment property or second home, whatever might it be. That equity is obviously available, and there's nothing else like it in terms of what you're able to borrow.
Yvonne, you covered the down payment. Ever so briefly, can you talk about the other costs involved in buying a home?
Sure.
Like closing costs.
Yes. So anytime you're looking to purchase a house, people will come to me with a certain down payment. So the first thing I always tell is, Zillow lists everything assuming you have a 720 credit score and 20% down. So all the payments and everything on Zillow, anytime you're looking at a house, assumes those two parameters. So down payment is going to be the sales price of the house at minimum 3.5%. So if something is selling for $200,000, you multiply 200 times 3.5, that's your down payment. Closing costs, that's an FHA, an example. Closing costs are now fees that all of us that are involved in doing this loan, that's how we make our living, that's how we get paid. So the lender always charges an underwriting fee, which is literally someone who is assessing the risk of your loan against the guidelines. I'm not going to go over how much those fees are, but there is a fee, irrelevant of loan size, that fee is the same. So $1 million house or $100,000 house, that fee is fixed for that year. So beginning of the year, everybody kind of puts out the fees. Attorneys have closing costs that are associated with legally closing this transaction for you. You are also setting up an escrow account, which is like a savings account that the lender manages on your behalf for your insurance and your taxes. Georgia charges like a sales tax. It's called intangible and transfer tax, but both of those are charged on every single transaction. So whenever you're budgeting for a house, and let's just say you find 3.5% down, you want to consider additional 3% in closing costs at minimum. Now here's the thing. In today's market, when rates are high, a lot of first-time home buyers are always sitting on the sidelines because they think, well, I'm going to do the rate when it's 5%. I'm going to go like guns blazing. So there are rules around different loans and how much a seller is able to pay legally towards your closing costs. So you essentially, as a realtor, go ask the seller, hey, I have a buyer and you have a house you're trying to sell and it's not moving. Market is slow. Are you willing to contribute X amount of dollars towards our closing costs for us to do that? FHA loans, which is what most first-time home buyers do, have the highest amount that a seller is legally able to contribute. So when interest rates are sitting at 6%, the difference in payment, let's just say a $300,000 loan versus when the rate's at 5%, let's just say it's $120 a month. But when the rate's at 5%, everyone and their cousin is beating on that seller's door asking to purchase that house and not asking for any closing costs. While when the rates are high, you have few people and a seller desperately trying to move that property off of the market. So that seller is very much so willing to pay your closing costs. So think about this scenario. If you are buying a house for $250,000, would you want to bring $10,000 down payment and $12,000 in closing costs? Or have a monthly payment that's $100 more, but only have to bring $10,000? $12,000 takes a lot longer to save. And a lot of people really miss on that opportunity. If you have been in business or looked at purchasing a house during COVID when rates were really, really low, first-time home buyers were knocked out of the market by I think like 40% because they had no way of competing. Because someone like me will say, you know what, I'm finally ready to sell my house. Someone like you who's been in forever. So now we are coming to the closing table with $100,000 because we sold our house and we've been there forever. And now someone who's a first-time home buyer is competing and saying, I have $10,000 and I need you to pay my closing costs. Or I'm going to say, I have $100,000 and I don't need you to pay my closing costs. That listing agent is always going to pick this person just because naturally it looks like a safer, easier bet. So a lot of first-time home buyers are really lost on the rate and overwhelmed with 6 versus 5. The monthly payment is minuscule, but your ability of what comes out of your checking account is drastically better when the rate is at 6%. Because I have every single loan that I closed this month with seller paying all closing costs. In fact, one, I had so much money left over, I was able to buy down the rate. That's cool. Right? I have one that we had to go back and forth trying to figure out like what's the max in closing costs can we get because do we have enough? Can we what can I refund? I'm like literally thinking like can I max out the escrow account? Like all of these math numbers I'm doing because I have a seller who wants to sell a house. I have a buyer who's qualified, and that house doesn't have any of the offers. So the seller's going to say, okay, I'm not going to give them the $11,000 they're asking for. I'm going to put it back on the market, endure another month or two of mortgages, and maybe nobody else wants this house. What if the rates go up? I have a seller now, and that seller's willing to buy. So yes, I'm going to lose $11K, but I won't have a mortgage anymore. I want to have a house hanging over my head. So use the rates being higher as your negotiating tactic. Because when the rates are lower, the first-time home buyers just are left in the dust. I mean, during COVID, investors were coming in, just buying houses in cash.
I was just gonna say,
Yeah.
go ahead.
Yeah, I have a question. Something, just to piggyback off something you just said. Could you please, kind of let them know, you have buyers that come in and say, hey, I have $10,000, or they think $10,000 is gonna make a difference in their monthly payment. Could you address them?
Yeah, no, it's so minuscule, it's almost funny. It's really funny because you're dividing it by 360, I'm sorry. You have to put down like, I spoke to somebody recently who had a budget and they were like, I have a budget of like $1,800 a month and they're looking at a house for $340,000. And I was like, you're gonna have to put down like $120,000 for this to be in your budget. Like it takes a lot. So $10,000 in either direction is nothing. It's nothing. Yeah. And a lot of times, like all the tricks, and obviously you guys just work with realtors, they'll give you all the tricks, but if a house has been sitting on the market for a long time, and we know the value is there, but just there hasn't been enough traction, right? Let's just say it's a house for $290 sitting, but it started like $320 or $315, whatever it is, and it's been slowly going backwards. So that realtor that listed that house for $310, $3 whatever I just said, I have zero memory that's short term. This is how you know you're getting old. 3 years ago, anything you need, I got it. Like 5 minutes ago, I'm like, what did I just say? But whatever was the number, that I just said, that value we know is there because realtors don't list properties just willy-nilly. They just say, okay, this is what the neighborhood is selling for. So now the seller has gone all the way down to say $290 from $310. Let's use this number. what you're able to do is say, okay, the $290, they're not giving me any closing cost. What if I buy this house from you for $300 and you give me $10K back in closing costs? The seller's already willing to take $290, so the bottom line is still the same. People get so crazy. How do I want to pay all that? This $52 is saving you $10,000 that you don't have.
Okay.
This is crazy. Like, why would you not? If anybody here who's over the age of 40 could go back like 30 years, would you not buy everything that you could?
Yes.
Because it was so much cheaper, like everything.
Yes.
Real estate has not gone backwards. It does one of those little zigzaggy things for a second, but when it does, then everybody who's an investor or cash buyer scoops up those.
Property opposed to a new purchase.
I mean, I think it depends on your ability to, and willingness and time to invest in it. I think you have to look at all of the things. I talk to people all the time about all sorts of scenarios, and sometimes somebody will say to me, well, I'm waiting for things to get better or whatever. And it's not based on anything. There's just kind of like just an idea. But if you actually have looked at that house and you know how much it costs to do whatever it is that needs to be fixed, and you are able to assess the value once it's fixed to what it is that the neighborhood is selling for, you make a decision based on money.
Sometimes it could be a situation where that person just needs to get out of that, and it's not really messed up.
Right, I mean, then obviously then it's like, that sounds like just getting a deal, right? But I mean, is the question about the person who's losing the house or about the person who's purchasing the house?
Both, because one person is selling it, the other person is looking to get a profitability to save money.
So I obviously will never deal with the seller as a loan officer. I only talk to buyers. So my breadth of experience is only with a buyer because I do loans for them. I'm never part of the conversation with the seller. So obviously whatever the seller is doing, that's on them. Buyer, I think if the value of the property is, there are certain neighborhoods that it would be crazy not to buy because they just are busting at the seams. You know, everybody wants to live there. But there are properties that kind of see, okay, no one is really doing anything here, even if it's cheap. No one is doing anything here. Chances are you're not going to make your money. I mean, it's all neighborhood, you know, real estate, location, location, location. I mean, that obviously exists for a reason.
And I would just want to add about foreclosed property. Every foreclosed situation is different. You have some that are vacant, some are torn up, some are nice. Some you may even have to get rid of the owner that's in there. So every foreclosure. So some people hire foreclosure. Great idea. And remember, you may not be able to do that traditional inspection and all of that. So every foreclosure house is very unique and different. So Yvonne's going to be back over there in her office because everything is about money, right? So she could talk all day long and we could ask questions all day long. But it's so important for you to talk to a real lender and not be looking at YouTube and all these people that got all this stuff are like Zillow talking about the estimate because they're looking at your situation and your situation is as different as your DNA. So we're going to go to the next portion of our program today. So we're going to open up the stations back and we're going to have some more prizes. Okay.
So this prize is a Chef Tiffany Moore Gourmet Foods gift box.
Okay, we got Agri. Okay.
My head falling off.
All right. So you want to?
Yeah.
Right there.
Congratulations.
Okay.
This is right across the street. Chef Tiffany Moore is opening up her brand new restaurant. It's going to be opening mid-August, so make sure you enjoy. She's chef inspired. You can find all her spices on Walmart.com. You enjoy?
Stephanie Daly. Stephanie Daly, right there.
$10 gift card.
All right.
That's right.
Patula, tell it.
It's Patula.
All right.
$10 gift card.
$10 gift card, all right.
$15 gift card next.
All right, Deborah Gray? Yeah! All right, that's our line dancing lady. Taylor Carmen.
This is for a $25 gift card.
Taylor?
Okay.
Oh, Taylor! Okay. Barbara's new client.
We have another $25 gift card.
Wilma Minifield?
$25 gift card. That's right.
Okay. Sheldon Hill. All right. Okay, Sheldon. All right. DeMarco Thomas.
Woo!
DeMarco. Okay.
We have one more.
All right.
This is for a $50 gift card. This is the last one.
All right. Last one. Okay. All right. Walter Arbor. Okay.
All right.
All right. We want to thank again our sponsors, vendors for doing the gift cards. And if you haven't, go back out and talk to the
Vendors.
vendors, and everybody got their tickets for the dessert truck. Okay, thank you all for coming.